All right, good morning, everyone. Let's get going. All right, U.S. stocks managed to finally pull back a little bit for the first day in a couple, for the first day in a couple weeks. You can see there every sector was down across the board. We really had a sharp sell-off right at the open, which really took a day with zero volatility in Europe down with it and down very quickly. I think the DAX lost about 1.5% in about the first hour that the States was open. We also saw just kind of a sideways grind after we settled in on the S&P, which I think is a relatively positive sign. You get sharp sell-off like that, and then the market doesn't continue to make new lows throughout the day. You just kind of get the sideways move. It really is something that you see typically in the middle of bull markets. So I think we've got to take note of the action of the S&P and realize that is what is still happening right now. We did see much more intense selling out of Asia this morning. You can see there every market was down with the exception of New Zealand. Shanghai, which was up earlier, also finished down. The Nikkei, as we speak right now, I'm looking at it on the Bloomberg terminal, down 4%. So that's quite a beating. We're obviously seeing the yen, which is starting to strengthen a little bit here. And I think most of this has been most of that, and along with the decline in the gold price and some of the small declines in the other commodities, really is accelerated off the back of the comments from I think Charles Evans. I think that Dennis Lockhart also made some comments, and then Richard Fisher's comments as well. So really across the board, I think yesterday could have been a really key day. I was just reading over a little bit of it a second ago, and it really just seems that a lot of them are starting to say that, hey, the data is really looking good. Things are starting to look better. Now's our opportunity. The only opportunity we have to start tapering is really when things are strong. So that we're going to have to start doing it now. So I think we'll look at yesterday as maybe a bit of a turning point again, and that it's imminent, and that we will probably start tapering sometime at the end of this year. So it's just really important to continue to watch that jargon going forward. The one thing I would like to just point out is that if we do get any comment out of what's her name? Janet Yellen over the next week or two, that comment is going to weigh more heavily on the market than anything. I think it's really starting to take some sort of shape that she's going to be and is fully expected to be the next Fed chair. And so if she makes any comments, guys, it's incredibly important. It could potentially move markets more than anything that we've seen move markets in the last year or two. So just keep that in mind. You see that comment, that's going to be a lasting effect if she makes a big comment over the next couple of weeks. So just keep an eye out for that. We also we had a lot of earnings out last night and this morning. With 20th Century Fox in the States is a miss on EPS, beat on revenue. We have Walt Disney, which is a beat in EPS and a miss on revenue. That Old Mutual, which is out this morning, came in at 9.3p. Expected was at 9.5p. So there was a little bit of a miss on the EPS. The divvy came right in line. And they're saying that the embedded value per share is at basically 210, which previously it was at 218. So I think that's if anything, I would look at the mutual numbers as a bit of soft numbers. So Anglo Gold was out this morning with their second quarter numbers in the States. You had adjusted headline earnings per share with a loss of 35 cents. Expectations were for a loss of 37 cents. So it's actually a slight beat, even though they had a loss. Production came in at 935 kilograms. We also had dividend per share that they've cut, and they said they're going to review that going forward. Expectation was for 50 cents, so that's definitely a miss. They're saying that the production is expected to be between 950 and 1,000 kilos per ounce. And then we have cash. That doesn't really doesn't make sense at all. Anyway, cash costs between $860 per ounce and $890 per ounce. Okay, 950,000 ounces. Yeah, that's right. Sorry. Okay. Okay, so we've cleared that up. That's that's the actual volume. So that's 950,000 ounces to 1 million ounces. All right. Market data out today. There's very little out today. We've got we had Australian home loans, which were better than expected. We've got BOE inflation report out in UK later. We've got industrial production from Germany at 12, and then we have mortgage apps at 1. Okay, let's have a look at the maps real quick. Why does this chart always pop up? Okay. First one we'll look at here is Anglo Gold. Sorry, not Anglo Gold. This is Anglos. Anglos will shorten it up just a touch. Obviously Anglos has been in a longer-term downtrend. We kind of came up and we did break above resistance here. I think it's really important. Yesterday we dropped resistance in a really sharp down day. We're down over 4% in the UK. You can see here, this is actually a beautiful little setup. When we dropped the wedge pattern, we came back off of what looks like likely to be a potential head fake on a break above resistance, drops back below the resistance and back below the wedge on the same pattern on the same day and on a longer term downtrend. So I really think that if guys we're looking to put short exposure on an Anglos yesterday, after yesterday's action, it's the time to fade it. Not trying to pick the tops, but actually try to fade it after yesterday's action. I think I really think we could have a nice quick move, slightly lower out of Anglos over the next few sessions. All right, Naspers. We'll look at the 30-minute chart here in Naspers. Well, there we go. What I wanted to show here is just the continuation pattern that we have set up, quite clearly defined right here around the 35 level. We closed at 34.90, so we were really close right at resistance. I would like to see us trade above 835 for at least 20-30 minutes to kind of confirm a breakout. But just watch this one closely. 935 is definitely kind of shaping up to be a bit of a level here. If we break out above this, I think we can trade all the way up to call it 855. So just watch this one closely. It's definitely been one of the strongest stocks on the board for quite a long time now. Anglo Gold. Let's back this out. You can see there we really same sort of thing. It looks inverse to what we were looking at with Naspers. Continuation pattern. We managed to close at we actually closed at 21.98, which is just here, this little dot right here, if you can see that. So we're just above support, which you kind of peg around. Call it. It's probably actually better to draw this line down here at 21.50. But regardless, we're talking about half a rand. Below 21.50, I think Anglo Gold. I'm on a 5-minute chart. Below 21.50, I think Anglo Gold can really drop support. You can see it again here. That's the level that we're going to look for. We're basically right at it right now. We drop that. I think we could have potentially 20 rand to downside left to go in Anglo Gold, and really very likely see us trade to around 100 rand price target, bringing Anglo Gold and CFR at the same price, which I never thought I'd see anytime in the next few years, and it's already happened kind of all in 1 year. All right, Harmony. You can see here, same sort of thing, also setting up into a little continuation pattern. This thing kind of looked like it was going to try to fight its way to make a bit of a reversal, and just wasn't able to pull it off below $33, which you actually saw Anglo Gold and Harmony both close below these levels in dollar terms in the U.S. on the session last night. So you're probably expecting them to open down there anyway. So just watch these closely. Drop below $33 in Harmony. Also, same sort of thing. I think we've got a good potentially $8, or sorry, $6, $5 in downside, which would take us down to around 28 Rand in Harmony. So remember, we're thinking about percentage moves here. That's a hell of a move for that stock. All right, let's look at ShopRite. ShopRite also, we sent out tweets about a couple of these yesterday, but ShopRite, that's the previous closing low, because realize this green bar is not it closed up here on this day. So the previous closing low was down here. It lines up nicely with the bottom of our wick going all the way back into late January. And that's really the line that we dropped yesterday. You can see here, but not only did we drop closing lows, we dropped even intraday lows in terms of ShopRite for the past, call it 9 months. So I think this is obviously really significant, and I think what you're seeing here, you're kind of seeing it across the board. We'll go through a couple more of these things. We'll look at, obviously one of its competitors would be someone like a Woolworths, and you can see here same sort of thing. Woolworths has really dropped support. If you draw this in the closes, we've already dropped it, but it's looking a little bit ominous potentially for Woolworths. You can also look at some of the other retailers. They're all really, the entire sector is getting a little bit heavy, with shares like Truworths that are really dropping support as well. But really the entire sector is starting to look that way. So just be really careful of the retailers over the next few sessions. I would expect them to continue to be heavy, that lots of them are dropping critical support, and we could continue to see lower levels. And then the last one I'll show is one of the offshore stocks. You can see here Glencore. We'll shorten this up a touch so that you can just see same sort of thing. We're coming down out of a longer term downtrend. We kind of get this little upward sloping wedge pattern here, which we clearly dropped out of yesterday. And in my mind, this thing is going to at least come down and test previous lows, if not even break to new lows. So I think in general, I think those mining stocks, from the golds all the way across the board, probably going to be under pressure this morning after seeing charts like Anglo's, Glencore yesterday, seeing what these gold charts are looking like. So and the retailers as well. So we may be right back on track with weak retailers, weak miners. Everything else is relatively solid, as we saw that action for a long time previously. So just keep an eye on that and see if that continues to play out over the next few sessions. That's it for today, guys. Thanks a lot.